Today, the spotlight is shining brightly and somewhat harshly on Nutanix. If you've been tracking the news, Nutanix Inc. order has been making major headlines today, and not necessarily for all the right reasons. Let's dive into what went down and why Nutanix is the talk of the town. First up, Nutanix announced their third quarter fiscal 2024 results, and boy did the stock market respond. Despite some seriously impressive numbers, the stock plunged by a whopping 22%. I know, right? You'd think they'd posted a disaster of a quarter, but that's far from the case. Their revenue jumped 17% year over year to $524.5 million, and adjusted earnings per share skyrocketed from 4 to 28 cents, completely crushing Wall Street's expected 16 cents per share on revenue estimates around $517 million. Now, why the panic, you ask? Well, Nutanix's Q4 guidance underwhelmed investors. Management projected revenue to cap at $540 million, whereas analysts were hoping for a more optimistic $546 million. When your stock's been riding high with a 149% gain over the last year, any deviation from perfection can send people running for the exits. That's investor expectations for you, like an unrelenting judge with a gavel made of sheer panic. Analysts are scratching their heads, and some are actually updating their forecasts in light of the strong Q3 performance and robust annual growth. But short-term outlooks kept the market cold as ice, understandably raising eyebrows and tightening wallets. Flashback to the numbers. ACV billings rose 20% to $288.9 million, and ARR increased 24% to $182 billion. Adjusted gross margin expanded to 86.5%, showing Nutanix knows how to control costs while driving growth. Still, these positive indicators weren't enough to soothe investor nerves. Adding a layer of complexity, Nutanix is a big player in the AI boom, continuously forging new partnerships for cloud-based AI systems management. Yet, these high-potential deals take longer to close. Think of them as marathon relationships, not speed dating stints. Today's negotiations may bear significant fruits in 2025 and beyond, but they are not going to magically puff up next quarter's revenue. Operating cash flow for the quarter was $96.4 million, with free cash flow at $78.3 million, financial signs that Nutanix isn't running out of steam anytime soon. However, to the market, it's all about the immediate horizons. So what do you think, folks? Are the analysts onto something with their long-term optimism? Or do you side with the investors who are jittery about Q4 guidance? Is this a classic case of Wall Street overreacting? As always, we love to hear your thoughts. Hit the comments below and let's get the conversation started. How are you handling Nutanix in your portfolios? Is this a buying opportunity or a sign to stay away? Let's hash it out together, and remember, in the land of tech stocks, there's never a dull moment. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.